What do you think are going to be the primary discussion points coming out of the incoming tax measures, besides just plain old tax increases?
Well, that's an interesting question because they've got some spenders, but most of them are fixing what happened to some of our population after the federal tax changes, and that's 50, 60, right. $70 million. They're diverting motor vehicle excise money to the road funds to cover the road funds, but that creates, a deficit in the general fund, which costs or has the potential to cost money. This is in the House proposals. Even the internet sales provisions could cost the general fund money, because anytime you take a sale and that's oxymoronic to some, because anytime you take a transaction that was subject to a 5 1/8% tax, that all went to the general fund previously. It was sourced to their out-of-state location of the seller. Now, under this proposal, they'll source it to where the buyer is, which is great because the local governments will share. But of the 5 1/8, 1.225% goes back to the municipality if it's within a municipal boundary, and 80% of our tax base is within municipal boundaries. So that means that even though the tax rate may go up to 7-8% or even higher in places like Santa Fe, the general fund actually gets less of that same tax charge. So that could be an issue. That same destination sourcing regime is an issue for Amazon, although they're fine with it, charging where the buyer is. But because of the Commerce Clause, we have to do the same thing to our own sellers. So if we have sellers that deliver things, they were used to reporting at their business location, they may now have to report a portion of their sales to where their deliveries go. And that is a complicated adjustment for some, especially the smaller businesses.